Back at it. Deal of the week. Seth, what you got?
Let's go, Riney. Let's go.
So this was a deal that all of you out there overlooked. This is a 25 unit elevator building, northwest corner, McCarran Park, 100% free market. Sold for 21.5 million, asking 24. That's why you got to pay attention.
Right, but I don't get it, Shaun. How are you asking a 3.8 cap and still got some activity?
Because it had juice, baby. Lots of juice.
Like
Probably
juice.
more
Like
juice than our pro forma suggests. So this ultimately traded 21.5 million. Again, 100% free market in an otherwise location that very rarely do you get an elevator building in Williamsburg without an abatement that's fully free market. 4.2% cap rate on current rents, but these were 2014 renovations that can be upgraded to 2022 aesthetics. I think our pro forma actually will end up being light depending on how much money you spent. So why did the buyer buy it? They bought it because they see a way to grow to a 6% cap on cost. And this is a location that you will always have a reversion and an exit cap much below that. So very unique product. These were some pictures of the ground floor renovated units, but this is location is you can't beat it in Williamsburg. It's as good as it gets.
What was unique about the buyer, Shaun, that we sourced?
I mean, I don't know if they were that unique. They just saw an opportunity to really upgrade 2014 vintage units to 2022 standards. The lobby was renovated by the previous seller, but they basically left the second through sixth floors untouched. It was a 7-year cycle of their fund. We actually sold the property to the seller in 2014 for 17 million. So there was a gain there. But again, just basically location, seeing that there was an opportunity to get paid for your efforts. And again, kind of a unique product, 100% free market. So
yeah, these types of buildings have seen significant rental growth in the past 18 months. This is the type of building and location where you're getting your rental pops for sure.
Yeah.
And Shaun, where were they in the financing in the debt markets? Like, were they putting long-term debt on this? You know, what rate did they lock in?
I'm not really sure, Joe. If someone starts asking me about financing, I just move on to the next buyer.
I couldn't agree with you more, you know?
Yes, that's right.
Positive leverage.
Stick with what you're good at, Shaun.
Yeah,
that's right. Joe, Orchard Street? This looks like a smaller version of the same building.
I think this is the most overlooked deal that we have on the market right now. This was built as a hotel, brand new construction. It is now an apartment building with the short-term stay component. And you have dual C of O here where you could run it as transient as well. This is very unique. It's a block through Orchard to Allen in the Lower East Side, you know, right down the block from the Soho House. We're asking 14.75. We have 21 units. There's a brand new restaurant, speakeasy downstairs. Again, this is something you need to look at because it's all free market. And you know what's going on with the rental market today, Shaun.
Hold on, 14,000 a month for $50 a foot. That seems really light.
I will tell you some of that is in the basement space. However, that is an under market COVID lease. So there is upside there down the road. It's an operator that runs other restaurants and bars in the neighborhood.
So are these rents in place, the transient, like hotel units, or are they just permanent housing?
Some of the units are they're being run as regular apartments, and then some are more transient where they're furnished rentals, but they're able to do that under the current C of O.
I mean, this looks like a rent. I don't see those type of rents, even if they're small units. I mean, you can't find a studio for that price anywhere.
Correct. So some of these are still COVID rents that need to be turned. So there's a mark-to-market play. Some of the units, as you can see, 210 square feet for a studio. It's efficient, and you'll like it once you get in there. It's got an industrial style feel. It's got a gym. It's a real gem of an asset in a phenomenal location on the Lower East Side.
Why would someone sell this building? This seems like a building that everyone would want to own. Why would you sell it?
Yeah, so the seller of this building, took it through the debt. The developer had some issues a couple of years ago, and there's an opportunity here for the seller to move on.
Got it.
Yeah,
Very interesting.
Some of the pushback is that It's only 21 feet wide, but you don't feel like that once you're inside because of the block, that it's a block through and you have, windows on both sides. And you go back for a second, Seth, there's an amazing terrace space. It's a really unique asset that everyone should take a closer look at, and we should go tour it together.
And just going back to the rent roll, the thing that comes across my mind is like, if you did do it per night and you turn it back into a hotel, like where are you going to get?
There's your transient use.
I was say the per night cost, on the current rent roll, is super low.
Yeah. And, there may be an option to just convert this back to hotel. We have hospitality operators looking at it right now because of just what's happening, as the tourists come back to New York, as they already are back, and, the hotel market's booming again.
I'm pretty sure the city's paying more in rent for homeless shelters than the current rent roll it's getting, right?
Definitely a play here, Shaun. Bring them from Brooklyn, bring them across the bridge.
That's right. Anything market rate is down in price, but anything with a government subsidy is worth 3 times as much. Yep.
It's unbelievable.
That's really amazing.
Seth,
all right.
What do you got? What's your DILLY of the week?
All right. So this is a 3-building portfolio that we actually have under contract for closing in a couple of weeks. This is in the Bronx. We're selling it for a family who owned it for a couple of generations. And this is getting done. I can't tell you exactly where it's getting done, but it's getting done reasonably close to this asking price. We're asking 8.4 times the rent and 140,000 a unit. So it's getting done just below 8 times the rent and basically a 6 cap for really, really well located elevator buildings. These have some CapEx work, for local law 11. They have a union. These were tough on collections, but the locations are amazing. Right off of Pelham Parkway. A ton of preferential rents. These are the types of addresses where if you're in the Bronx, you want to own these. So here, look, you see a $3 million rent roll and a $3.6 million legal rent roll. So you got $600,000 a year in preferential rents that you can absolutely take advantage of. And that was one of the reasons why the buyer wanted to buy the buildings.
So are we back to an 8 times multiple in the Bronx?
If you're lucky. Yeah, look, the market right now is really it's tricky right now, and we're selling buildings in Upper Manhattan actually for similar metrics that we are to buildings in the Bronx. So it's really all buyer and seller demand, and it's purely based on location and quality of the asset. So you can see here, these are solid buildings in really good neighborhoods. Let me see if I can find a map. I didn't put a map in here, but look, it's not everyone in the market can do a $20 million deal and take over 180 or 190 apartments. So I thought that was a really good opportunity for someone.
You sure there's buildings in the Bronx? That's a clean basement.
I know, it's pretty nice, right? Yeah, that's why you bought it.
Look, at the end of the day, what we're trying to tell you, New York City audience, is this is a really good buying opportunity. The market as a whole is fatigued, and buyers, literally, it's August. People are checked out, but sellers are ready to sell this month. So pay attention. Give us a call.